Good day, everyone. Welcome to the live stream. I'm James, and you're at the right place. We'll start again in about 6 minutes' time, whilst I'll do my sound checks and audio and so on. Good day. All right. So folks, welcome to all of you. And if you're in the chat, please give me a thumbs up. Let me know that you're in attendance and watching and that everything's working okay. And then we'll get into it as soon as everyone's in. So if you could just give me a hello or a yes, or just type your name. Let me know that you're hearing everything properly. I'll be right back in a second. All right, we're back. Just getting myself an unusual combination of Coke and coffee in the same mug. So, welcome to everyone. Hi there to Light Chaser 6, long on WTI. You might well be right, Light Chaser. Hello, Edgar, Antonio. Buenos dias to you too. Joy Deep, lovely to see you from India. Good day, Ben Hall and Erica and Valerie. Howdy to you too, from the big state of Texas, maybe. Here's my hello. Yes, and my name is Edgar. Hello, Edgar. Thank you for doing the whole hog. So you've confirmed your name and that you can hear me, and you've given me a yes. That's perfect. Good day, Robson Jr. And Cryptow 3B. Nice to see you. Good day, Tim, from Kansas City. Wow. I've ever been to Kansas. Obviously, everyone knows Kansas City from the storybooks. The Wizard of Oz. Perfect sound. Thank you, Light Chaser. Good day, Michael Sauvage. And good day to you, and greetings to the room from Michael. Good day, Amit. Lovely to see you. So, folks, what an evening last night and, well, over the weekend with the strikes on Iran by the... well, the Americans, really, but a combined effort between America and Israel, initially by Israel, America taking out, ostensibly, the nuclear facilities at 3 key reactors, a couple of them deep under the ground, and apparently all being destroyed. Personally, I think this is a fantastic thing for the world, but I don't want to talk about politics right now, but I do think this is positive for the world and potentially positive for the markets. And considering that we're interested and involved in the markets, we'll stay away from the politics and focus on how this might affect the stock markets, gold, energy, and so on, and where we're all heading on this in this seemingly massive mess that we've got ourselves into. So that's where we are. America strikes Iran. Iran may or may not retaliate through the Straits of Hormuz by trying to block the straits. They've tried it before, unsuccessfully, in the 80s, I believe it was. It's not such an easy task, and it also remains to be seen whether there's sufficient ammunition, missiles, mines, ships, whatever, that they might have to use to achieve that. But it's been tried before, it's not easy, and I don't think they want to cut off their oil supply to China. They supply 80%, or 80% of the Iran oil goes to, I'm not sure if it's 80% of China oil or 80% of Iran's oil, but 80% of the oil from there goes to China, and it goes through the Straits of Hormuz. So if those straits are blocked off by Iran, they will be also cutting off their own revenue and spiting their very erstwhile, apparently, maybe not so much, but they're erstwhile allies in China and potentially Russia too. So there we go. It's a bit of a messy situation, but I think it's all going to work out okay. And we're going to focus on what the markets might do and how they might react. Let me carry on greeting everyone. Blue Jail, lovely to see you. NK Upal from India, I'm guessing. Nice to see you. Hi. And Abayomi Adio from, I think we chatted last time. Nice to see you. I think you're from Nigeria. Michael Savage, what a fizzer from gold. Busted out early in the open and then fell away. Yeah, so gold, interesting. Gold actually tells pretty much the story, I think. And then Emily Trading, hello to you. And Ritesh, hi to you. And Steve, M1N1. Right, folks, we've got a minute to go before we get into the markets. And I'm going to try and tell you what I think is going on. Now, I don't want you to... so I'm going to tell you what I think is happening. And what the potential outcomes of all of this are. But it doesn't mean that I'm going to be right. In fact, I think when things are as messy and difficult as they are right now, the chances of being correct begin to decrease across the board, all around, on any side of the market that you might be approaching. So I don't know what's going to happen next. Anything that I say should be taken with an enormous pinch of salt and a huge dose of concrete for those of you who are still struggling with some shorts on oil and natural gas. We'll have a look at those as well. But folks, we're in a situation where the world has been turned upside down, I think, for, when I say the better, I'm not for war, I'm not for bombing anyone, but I'm not for nuclear weapons, and particularly not in the hands of Iran. So that's what I think is going on. The world may be breathing a sigh of relief, and I think the markets might reflect that. So I'm going to go across to the charts right now and have a look at some of the key instruments that we're trading and finish off the greetings. Good day, Martin. Nice to see you. And Asguz and Tanil Patel. Super keen to hear the NG news. All right, so why don't we start with natural gas whilst we're talking about all of this? And I'll show you my charts, and you can show me yours. No, you can't. Here's natural gas. Now, we're now no longer in the futures market. Let me just say that up front. The chart at the top right-hand side here, the one that I'm expanding now, is the Henry Hub futures price over at Black Bull. I'm now out of this market. If you remember, we got long at the bottom, we were short, we got long, we got out at the top, we got long, and we got out just late on Friday at the peak on Friday. And actually I sold, we got out at the bottom, and we sold on Friday very close to the close of play. Got out of the long trade. Out of the short trade. What am I talking about? So we were long and we went short. I actually moved that. It's confused. I've confused myself. I moved the arrow from there because I didn't duplicate it. So we were short from the top. I called that out on X and everything. We got out at the bottom. I called that out very clearly. And the reason I had moved this arrow is because we then took another short. And we took a short at the market open yesterday. But I'm drawing this on the natural gas futures chart, which is incorrect because my futures roll over today. And in lieu of that, I've been trading the continuous contract here at Pepperstone instead. Normally, when we're in the week before or after rollover, a couple of days either side of the rollover, I'll switch from the futures contracts at Black Bull, my broker at Black Bull, into the continuous ETF here at Pepperstone. And at the moment, the prices are pretty similar. 381 on Pepperstone on the continuous, and 394. Actually, somewhat of a gap now after we had the rollover gap on natural gas earlier on today. So we're not in the futures. What I'm trying to say to you is that we're not in the futures, but we are in the continuous price and we're short. What we did was, as the market opened up, I went short immediately for those in my private group, and I think I put this up on X as well. Actually, I can't remember. It may be up on X as well. But we went short at the market open about 10 minutes after the market opened up, and we got short right at the top here, and we're now trading somewhat down below us. So I think we got short at, 3.88, something like that. We're currently trading at 3.881. So we're about 7 cents in profit on that trade. That's the only trade we have on natural gas, folks. My target on this is $3. And my target will actually, at some point, I want to get short on the futures and get out of the continuous contract. Continuous contract, the ETF here at Pepperstone, charges overnight fees, which are expensive. Whereas on the futures, you don't pay any overnight rollover costs or carry costs. And I want to get back into the futures and get out of the continuous price at some point. So this is where we are. We're square on the on the futures. There are all our positions that we've taken in the past. Every one of these was called out on X. Maybe not every single one, but mostly. And many of them in the YouTube videos that I make. And also, obviously, every single trade is called out in my private group. There's a link below for my private group if you'd like to join that. But if you don't want to spend that money, you can at least join this YouTube channel. And there's a link below. It says join. Click on that button and pay $1 to become part of this YouTube community. And you'll get much more frequent updates, which you may not get if you're following me casually or as a subscriber. So here we are. This is our chart. We have no positions on. Our last position was the exit down at the bottom here, and we were short from the top, we were long from the bottom. All of this has worked out pretty well over the last number of contracts, all looking pretty good. We've taken no losses and we've been profitable, although we've had to hedge a couple of times, particularly on this rally up on the left-hand side here. So I'm still looking to go short. Notice that on this 4-hour chart, we're below the 20-period moving average. So in the short term, we're bearish. It's a very simple tool to use, simple 20-period moving average. If we're above it, we're going up, bullish. If we're below it, we're going down, we're bearish. And that applies to any chart, whether you're scalping, day trading, or if you're trading 4-hour charts or day charts or week charts, or if you're an investor, these are all good opportunities to use the 20-period moving average as your short-term momentum directional indicator. Right now on natural gas, it's short on the 4-hour chart, but let's go to the day chart. Remembering we don't have a position on the futures, but we are short on the ETF at Pepperstone. Now on the day chart, and I keep on pointing this out, we have what looks like a potential head and shoulders pattern. Pretty simple to see. Even if you're a novice, you can see, even though this right-hand shoulder is a bit squonk, shifted out, extended to the right-hand side, and not very neat. It's not very attractive to me. It doesn't look great. But it is nevertheless a potential head and shoulders pattern with a target well down into the twos at about 2.3 to 2.5. I don't think that's the most likely scenario. I think natural gas will be trading between $3 and $4 and potentially even up to $5 for the foreseeable future. That means I'm looking to buy dips closer to $3 and sell rallies closer to $4 and maybe slightly higher than that. So right now I'm looking to sell, and irrespective of the fact that this looks like a potential head and shoulders patterns, I don't like head and shoulders for a couple of reasons. One, they often don't work out. Two, you only know if they're going to work out once the neckline, or shoulder line rather, is broken. And so we can't call it a head and shoulders until we close beneath that level there. And that's at $3. So we probably won't close below $3. We'll probably bounce off it if we do get down there. But anyway, that's one of the reasons. The other reason is because so many people like to point out where head and shoulders patterns are on the chart. I don't know why. It's a little bit obsessive in my opinion. But head and shoulders, I think it's because they're so recognizable and human almost. So we're looking at another human body, and we recognize that, and we think that looks pretty cool. And so everyone flocks to these head and shoulders patterns with great gusto, enthusiasm, and vigor. But the problem is that most of the time they don't work out. And you'll only know that once we break down below this line here at about $3, which we may never do in the first place, in any event. And also this head and shoulders is not very neat. It's sort of sprawled out to the right-hand side here. And we've got this big spike up now and crashing back down. That's where we got short. And that's where we are, really. So how does it look on the day chart? Well, negative, I suppose, although it doesn't mean we can't keep on moving up. Now, a lot depends on what's going on in Iran, and particularly the Straits of Hormuz. Now, if Iran does block those straits off, and I'm not sure if they can, or even if they want to, if they do that, they'll really seriously piss off one of their main or only perhaps ally at this point in China, and 80% of Iran oil goes to China. If they block the Straits of Hormuz, that oil will no longer be able to get out, even though it's their own shipping. Some of it is not their own shipping. But nevertheless, if they're going to put a blockade across the straits, which are about, I think, 40 to 60 kilometers wide, that's a big job. And they're going to have to halt all shipping, including their own. And of course, they're not going to get away with it anyway. So the first thing that the Americans and the Allies will probably do is start bombing their natural gas and oil production facilities, which will is really something that the Chinese and the world just doesn't want overall. We don't want disruption in energy. So I don't think any of that's going to happen. That's my point. And I think we'll see natural gas and oil carry on moving down. And I'm not normally in the same direction on these two at the same time, but we are today. So we're short on natural gas and short on WTI oil. My target on natural gas is $3. My target on WTI oil is $55. Now, if we do manage to get back down below into this channel, and I think we could easily do that, notice how at the bottom of the channel here, we spiked way outside of the channel, but still eventually respected the channel. On this occasion, we've spiked way outside the channel, but notice that we have not closed outside the channel. Yesterday, or that big spike up on Friday, did not close outside the channel, big spike up and back down again. And today, Monday, we're still now not closing above the channel. We're inside the channel currently as we speak. So very much like at the bottom here on the left-hand side of your page, where we exceeded the channel, we did actually close below it for one day on the 5th of May. But let's just ignore that for pattern's sake, and we don't want to spoil a good story with the facts, do we? So so we didn't close beneath the lower point there, and the channel was respected. We have not closed above the higher part of the channel here, and the channel is still currently, and it may not last, but currently is still being respected. Target right back down here, $55, and then probably lower down to 50, maybe even into the 40s at some stage. This is not a quick, instant, easy trade, but it's a zigzaggy sort of move. All right, so that's it on natural gas and WTI oil, and also on uranium whilst we're on this chart. We're long on uranium, but we're not in URA right now. The URA chart here at the top right, left-hand side of the page. I'm very bullish on uranium, by the way, but we've had a good run on this one. We were long down here at the green arrow at 22, and we got out right at the top here at about 39. And we did take incremental profit here at the two orange arrows, 25%, 25%, and then the balance of 50% at the top there. I'm looking for this to pull back down to one of these yellow zones. Notice that we're still above the 20-period moving average here on the day chart. And notice how we've respected it, just to re-emphasize what I said earlier about natural gas and oil, etc., and their relationship with their 20-period moving averages. This is now respecting its 20-period moving average, but not for long. This is going to have to break down. It's too neat, too long, too extended, and we're going to have to pull back down to the yellow zone down here or down here. People will ask me, why am I not selling uranium? Well, we could be, but in my mix, in my basket of energy commodities, uranium, natural gas, and oil, I'm just happier not selling URA. We are long on UEC still, the other uranium twin that we trade. But this has gone on for too long. It's too high and it's too extended, and the 20-period moving average doesn't last forever. It's got to be at least retested and broken probably. We may need to visit the 50 down here. There's the 200, the purple line, and the grey-black line is the 100-period moving average. And we've got a trend line, and we've got this order block. So my money is on this returning back down to just below $30 at around 28. If it doesn't get that far and close this gap in the middle here, by the way, beautiful big juicy gap there that's beckoning and calling for closure. But if we don't manage to do that and we bounce off somewhere in this higher yellow zone, I'll be looking to add some positions on there. We do not have a position on URA right now at all. We've taken all of our profit right at the top there, and I might say with perfect, exemplary timing. But we are still long on uranium, and we have a UEC long position. We've added some more to that quite recently over here at about $6.42. We have another position from $4.69, and we've added at $6.42. And we're currently trading at $6.46. So, and also notice here on UEC, we're bouncing off the 20-period moving average. There, the 20 is the green one. The purple line is the 200-period moving average. The black and the red lines are the 50 and the 100. So notice, unlike URA, where I said we need to return to the 200 and the 20 and the confluence of those moving averages down here, right? We need to return there. Whereas on UEC, we're already there. And that's why I have not exited UEC. In fact, I've added a long tranche to UEC. And I think that's all on energies. And I'm going to go across to quickly look at currencies. Well, yeah, I don't know if anyone's interested in currencies. Not so popular in my group, currency traders. Mostly people trading natural gas, oil, gold, Bitcoin, that sort of thing, some of the more exciting trades. Currency trading is not as in vogue as it used to be these days, and it's more difficult to trade than most other instruments. Currencies don't trend as well. They're also impetuous, and they tend to range for long periods of time, and they tend to just misbehave. And so my currency trading has got less and less over the last 10 years, I suppose, and I've moved more into things like oil and gas and commodities, crypto, and stocks. So that's where we are, just in general in currencies. Not very excited about any of it, but we are long on the euro and long on the Aussie. And the one that I think is the most interesting, we'll come back to the yen crosses shortly. I think that the Aussie one offers the most bang for your buck. I love this pattern. It's an inverse head and shoulders upside down squiggly bracket. And if you have been watching me and recalling what I've been saying, I said we'd probably have to return back down to one of these lines to bounce off there. Looks like we've got down through the top one and bouncing off the 100-period moving average right in there. And we've got a lower line down here, which we could visit. I don't think we're going to take off or lift off until the 1st of July so that this pattern becomes symmetrical. So we've got another few days of faffing around. Probably 24 today. Tuesday, Wednesday, Thursday, Friday, just this week really. And then Monday we should have liftoff, Monday, Tuesday next week. So in the balance of this week, it's only Monday now, so in the whole week basically, look for a bounce, a reversal pattern on the Aussie dollar against one of these two lines, or the 100-period moving average where we are right now, and then the liftoff by the end of the week or early next week. And so we're long on the euro, long on the Aussie. I haven't added my new tranche on the Aussie just yet. We have one over there. I'll be looking to add at some point. We've got a smaller position on here. I'll be looking to add to that. And then the yen crosses, these have been incredibly annoying, and I'm going to have to do something about this today. Although it's very difficult. I'm actually hedged on the euro yen. We took two short positions down here, and then when we broke up through that level, I immediately hedged those two positions entirely. I then took another small, very small, 20% size, 1/5 size, short position over here at the top Bollinger Band, and the 61.8% Fibonacci. That has failed to hold, and we're now moving up to the 78.6. I think that's probably going to be the top. I think there's a really good chance of this reaching up to 171. We're at 169.5 now, up to 171, and then reversing dramatically and plunging down. My target for the euro yen is all the way down at 144 down here, and you can see how long we've extended beyond my projected collapse point. Instead of collapsing, we've actually rallied and we're moving up. So I think we'll probably get to there and then eventually try and have a go down below here. My target remains at 144. It's basically a technical target, the equivalent size of the previous flagpole. So that's the euro yen, and we also took another very small short position on the pound yen at the top of the channel, and we're still holding this. I have not hedged this just yet. Notice that the top 200 period Bollinger Bands up here and this big order block. Now the pound could keep moving up, the pound yen. I don't know, but both of these I'm keeping a very close eye on today, and I'll decide what to do today or tomorrow, but certainly in the first part of this week. I'm hoping that I think the best case scenario would probably be a quick and dramatic rally up to this order block area and then down, something like that. So that's the pound yen, and we'll see how we go. But like I said, on the euro yen and pound yen, both of them, I'm going to have to do something about them if they don't turn around in the next day or two. But luckily, these are small positions, and I've got plenty of opportunity to add or hedge or get out of the trade, whatever I want to do. So there's no urgency or stress about those. And yeah, so just very annoying, basically. Now, going across the stocks, I'll talk about more about the yen crosses at another point. But going across the stocks, bit of a bid now. We've got war going on, and I did put something up on X yesterday, and it would be nice to actually put this up here, but I'm not going to, but just for the sake of time. But over the last 75 years, I'm just going to kind of read it to you so that you know what I'm talking about. But over the last 70 or 75 years, the stock markets have been through 15 or 18 wars of various sorts, conflicts. Let me give you the breakdown on this. So essentially, so it's like 13 plus 7, that's 20, plus 4, 24 wars in the last 70 years, or conflicts of various sorts. And out of those 24, 13, the market was incredibly bullish afterwards. Out of those 24, 7 of those occasions, the market had very little reaction, up or down. So that's 7 plus 13, that's 20 occasions out of 24 that the markets did not collapse, did not move down. In fact, rallied instead. And then only on 4 occasions did the market actually collapse. So 20 out of 24 occasions, when there was war, significant conflict like we've got going on now, the markets rallied. Well, look at what happened. The market had moved down a little bit of a dip down, I suppose. Let's have a look at the NASDAQ. Bit of a dip down with the initial, this is Monday, right? So Monday, we opened sort of way down at the bottom here. So we did have a dip in the stock market, same with it on the S&P. But look how we've rallied back up again. But we're under the 20-period moving average here on the day chart, but we've rallied back up again. We're short on the NASDAQ. We've got a position from over here, and I have a position from over here. And I still don't know which way these markets are going to go until and unless we make new all-time highs on the NASDAQ, the S&P, the German 30, any of these indices. Until we get to new all-time highs, I'm going to have to remain with my bearish market view that this is a bear market until proven otherwise. A daily close above the recent all-time double top highs on the NASDAQ and the S&P will force me to change my mind. But we have not done that yet, and I remain short, notionally short, and physically short too, because we've got positions on both of these. At the same time, however, I'm long on the German 30, long on Tesla, long on ARC-K, and long on NVIDIA. So bit of hedging going on here, bit of a mixed bag. But I'm in these tech names at the bottom. I think these are all great, especially ARC. Very happy with my ARC trade. On ARC, we got in at $60. We're trading at 67 now, almost 68. So that's over 10% up already. And Tesla, I think, has got a good chance, and NVIDIA, and a couple of the other tech names. But we are short on the NASDAQ and the S&P, and it's simply out of principle. At the same time, as when we're talking about indices, we're long on the German 30, and there's the German 30 bouncing off the 50-period moving average. There's the 100 just below us. If you remember our last trade position, we got short at the top of the channel, and we got out at this ledge here at the 23% Fibonacci level. This green ledge, it's very clear. We got out of there, took full profit on our position, and then we rebought, or we didn't actually buy, we were short, but we had to buy to get out of that position. So we were short, we bought there to close and take profit on that short position, and then we bought some more on the dip down to the 50-period moving average, and we bounced up a little bit, not much. I think at one point we're about 500 points in profit. We might only be 100 or 200 points in profit right now. So a mixed bag on stocks, and it's still all pretty much up in the air. And especially when there's this sort of thing going on in the world, major conflict, although overall it's generally quite bullish for the markets, there's often a lot of thrashing around, whipsaw, and messing about. And that we just have to be careful that we pick a direction and that we don't get chopped up in the whipsaw and choppiness of the markets. And that happens quite a lot to people because it looks like it's going one way. You might get out and it sort of seems to reverse and you hedge, or you get out, or you change direction even, and you start going the other way, but you just realize you're caught up in the whipsaw, so you switch again and you go back long, or if you were short, and then you realize actually the market's going nowhere, it's just overall major whipsaw, and we're moving across the page sideways, taking out the top, taking out the bottom, and destroying retail traders on both top and bottom, both sides, long and short, but the market's going nowhere. So you don't want to be caught in that, and I think we're very much in that sort of market on the stock indices. As you can see on the NASDAQ and the S&P here, we've literally not gone anywhere for almost 2 months now. So we can go back to this green line. We just bounced off there today. 13th of May. Okay, I'm exaggerating. 1 month and 10 days, something like that. So a month and a half, we've been going sideways across the page. A lot of whipsaw, a lot of ups and downs, a lot of false starts. And it looks like, this is the sort of market where you think, wow, this has got going. We're finally going to break out. We've finally got something going on here. Look at these big candles, only to reverse the next day. Big spikes up and down. This is the NASDAQ. One up, one down, reversal pattern, which has not reversed. Another one up, one down, reversal pattern, which is still holding. That is a top. That is a reversal candle top, still holding. But then down again. And then you think, okay, well, that top's in place. Now we're going to move down. We could get a decent correction and our shorts will be in play. But the very next day, this was Monday last week, 1 week ago, a massive rally. Are we going to see the same today? Today looks pretty similar in shape, and it's a similar start. That's Monday today, where my cursor is, my mouse, and that's Monday last week, exactly 1 week ago. And then we collapsed down after that Monday, collapsed down again, big spike up, going all the way up, breaking through intermediate support and resistance and so on, then collapsing back down with the attack on Iran and so on. So yeah, don't get caught up in the whipsaw is basically the message here. And if you are being caught in whipsaw or you're confused about direction, please take a minute to join this channel. There's a join button below. Once you're part of this community, you can ask me anything. I'll make special videos for you if there's a particular question that a lot of people are asking, and you'll have direct access to me and some of the other members that can help you with your trading. If you're confused, even better, join my private group. There's a link below in the description where you can see all day, every single trade I take. I was up all night last night helping my private group members get through the chaos, the uncertainty, and the trades that were going on basically after the Iran attack, and markets were all over the show in pre-market, and people were looking at over-the-counter trade positions, having a look at what spot markets are doing in Europe. The US was closed, and just general absolute chaos and panic. And I stayed up all night last night making sure that my members were guided through all of this process and that they were not chopped up, not destroyed by whipsaw, not full of fear, not full of greed, and not full of concern and worry and all that sort of stuff that plagues so many traders. So that's what you get when you join up with my private group. You get access to me. I try my very best to give as much attention to all my members as possible, and I'll certainly help you if you're struggling with anything in your trading. Don't lose your $1,000, $5,000, $10,000, $100,000 trading account for the sake of saving $60 a month. I subscribe to all sorts of things myself, which I don't necessarily need to, but they save me time, they give me better information, they make me money, they save me money, they help me in my business. You should treat trading as a business. You should subscribe to things that help you in your business, whether it's good charting, whether it's a decent broker, whether it's the advice of I was going to say guru, an experienced master trader. You need all of that. Doesn't matter what you're doing. If you don't learn how to do it properly, you're never going to succeed. So don't waste your $10,000, $20,000, $5,000, $2,000 account blowing it all trading natural gas or whatever it is, and you don't understand what you're doing. Spend 60 or $100 a month, depending on discounts available, at my private group, and I'll try my very best to stop you, to help you, and prevent you from losing money. Now, let's go across and quickly look at cryptos and metals. Ethereum, Bitcoin, and XRP. We're still long on all of these. I really like this Bitcoin chart, but once again, like I often say, it's a little bit too neat for my liking. I don't like such neat charts, but sometimes they do work. When you see something like this with a beautiful bull flag channel, perfectly respected, twice on the top, twice on the bottom, a long-term trend line rising up from underneath us. This is the weekly chart now. There's the long-term beautiful trend line. Once again, a little bit too neat for my liking. And below and at the trend line, we have the 20 period and the 100 period moving average right there. And that's another target, and also this ledge at 93,000 and some change. So all of this level here at 93 and some change is a potential target. However, this looks absolutely technically perfect. If you were writing your exams as a CTA or I can't remember what they're called now, the commodity trading exams, which I've still got to write. Or I've got the material, I've got to write the exam. But if you look at any textbook in these sorts of, in this material, these exams, these training for commodity traders and advisors and that sort of thing, this setup right here is absolutely technically perfect. We've got a trend line, the moving averages, the bull flag, big run up, bull flag, angling down slightly, perfect 2 times touch at the top, perfect 2 times touch at the bottom. A little bit of a spike down through there on this occasion, nothing serious, but bouncing up beautifully and back above 100. I don't want this to close below that black line right there in the middle, at around about 100. It's actually at about 100.7, 100,700. but we could move that down to 100,000. I'm not too fixed on the exact number, but that level there, more or less, give or take a couple $100 either side, is the level that I really want to hold today. I don't want to close beneath that level today. And if we manage to do that, we rally up and get up through the 20 and the 50 period moving averages, these averages at the top here, where the horizontal line is, and the channel center line. If we manage to do that, then we should see Bitcoin moving up towards my targets throughout the rest of this year, really. And my targets are around about 165,000, and it could be less than that, or it could be more. That's a pure thumbs up based on the 1.618% Fibonacci extension. At the same time, we're long on XRP and Ethereum. I added 2 small tranches to all 3 of these last night at the lows, or as close as I could get. Didn't quite get the low on Bitcoin, but I got the low on Ethereum and I got the low on XRP. Now, when it comes to gold and silver, we remain short on gold and long on silver and long on copper. So let's have a look at this gold chart. And, you know, the more this goes sideways and has these sort of little tops like this, like we're seeing quite frequently, even if it's a little higher than the previous one, the more this happens, the more likely it is that my paths will work out. My target for gold is $3,000 plus or minus a little bit above, a little bit below, or down to $2,800, a little bit above, a little bit below into this next order block. At that point, I'll be starting to look to buy gold to accumulate and build up for another new leg up, which should take about, it might not even take place this year, but maybe towards the end of the year, in the next, you know, maybe November, something like that, December, or maybe early next year. But then a bounce off one of these levels and a continuation of this rally up to about 3.5, 4.5, something like that, up into those regions. I got all the fib extensions. There's one at 4.5, which is quite a good one. So, but I do think we've got to pull back first. And so I remain short. There are my 3 tranches. We're basically at break even on those shorts, but we are gathering overnight compensation and payout from the broker, as gold shorts are wont to do. And at the same time, we're short on gold, we're long on silver, and this is now the 4th time, maybe it's the 5th time that we've been long on silver, but short on gold. And on the previous, let's say it was 4 occasions, we took profit on both long silver and short gold simultaneously. Well, we're long silver, short gold again. And yeah, it's a bit of a hedge. Of course, I do believe that these metals markets are all in a bull phase. And I'm long on silver, I'm long on copper. The only reason I'm short on gold is not because I think it's bearish, but because I do think we need a pullback. And I'm willing to just short gold. This is not a massive position once again, but I'm willing to short gold into these lower levels in order to reverse and then go back long. We're also long on, so we're long on silver. Silver, I think, you know, if we can get silver moving up a little bit higher, let's go to the weekly chart here. If we can get silver moving up just a little bit higher, I think we can close at $37.50. We didn't quite get there. We almost got there. And we've also got a bit of a weekly tweezer top here, which I don't quite like, but, or even an not engulfing pattern, and a broadening, expanding pattern. So maybe silver's finding a top here. I don't know. But I think we can get up to, my target is 37.50. We almost got there. But I think if we can close up at these sorts of levels, around about 35 to 37 to 37.50, then we could see silver actually carrying on and moving up higher. So overall, a nice big bullish pattern, big clear out spike down because of Donald Trump's Liberation Day, and off we go. Straight after that, back to the day chart. There's the Liberation Day clear out, and we haven't looked back since. 2 spike lows down here to the 20 period moving average, holding up quite well and looking fairly firm. So yeah, so we're still short gold, long silver, but long copper now as well. And I think as well, we talked about copper in the last live stream quite a lot. And I think that copper, there's the, once again, Independence Day, not Independence Day, Liberation Day, clear out there and a big bounce. And we really haven't been shown any weakness since then. A big V-shaped spike low and holding all of these moving averages and moving up. Now, I think copper and silver are vital ingredients for many of the technologies that we're busy expanding, working on, developing, increasing, not only in technologies related to peacetime, but also war. A lot of this stuff goes into war materials. And so I wouldn't be surprised if we saw a bit of a bid on silver and a little bit on copper, or gold as well, and copper. Some of these are all of these are used in munitions to some extent, particularly silver and also copper. So yeah, with that, but also the AI technology, batteries, semiconductors, conductors, quarter conductors, all of those sorts of things, all use gold, silver, and copper. So as those industries carry on expanding and growing, which I think they will, we should see a continued demand for some of these metals. Right, and I think we've basically covered everything. We're going back to natural gas on this chart. Here's what we're trading. Oil's moving down right now as we're speaking. Oil moving down sharply. Natural gas moving down sharply. We're down to $3.77 on natural gas, and we got in very close to $3.90. So that's the only position we have on natural gas on the continuous. I have no futures position. I'll probably look at the futures tomorrow, and we're also short on WTI oil. Targets down to the bottom of Moab. Target down to Moab. Let me just highlight where Moab is on this chart. It's this level here, this orange block. That's the first target for shorts on oil, and that's at $65. That's the mother of all breaks. Funny, we've been talking about Moab, mother of all breaks. The actual term comes from the US military, and we've just seen these bombs being used, mother of all bombs, bunker busters. It's just very funny. We've been talking about it on and off for the last number of months. And now we've got real Moabs being used. So target down here to Moab, the orange block. And then once we break down below there, retest it from underneath. A lot of faffing around, fiddling around. It's a spiky old instrument, oil. Don't expect smooth sailing. But eventually you break down through there and a retest of these lows at 55. That's looking pretty good as we're talking. And natural gas is moving down sharply too as we're talking, which is nice. Quite often when I'm making these videos, I'm saying, well, we're short on natural gas. And every time I look at the natural gas chart, it's gone up by like 5 cents. But on this occasion, it's moving down quite beautifully and quite starkly, quite suddenly, dramatically. So that's it, folks. Now I'm going to go across to all the questions and see if there's anything that I've skipped or omitted or not explained in sufficient detail, or something that I just said that was absolute rubbish or nonsense, which probably happens fairly often. So I'm just going to read some of the comments. Good day, Abayomi from Nigeria. Yes, Michael Savage, what a fizzer from gold. Busted out early in the open, then fell away. Yeah, so gold, Michael. Why is gold not rallying? Why is oil not rallying? Why is natural gas not rallying? I mean, why, look at gold. What's going on? Why is the market doing exactly what I thought it would do, but not what everyone else thought it would do? And moving down in energy, moving down in gold, up in the stock markets. Exactly the opposite to what everyone was expecting. But I have to say, I've been consistently opposite to that view until now, and I remain so. So short on gold, and yeah, a bit of a false start in the beginning, and then it's now collapsed down quite suddenly. Michael says, second quarter options expiry this week. Let the games begin. Yeah, so we had triple witching on Friday, Michael. We had 4 different types of options expirations on Friday. And on Friday, none of those options strike levels were reached, obtained, achieved. As far as I could tell, those markets closed with all of those options expiring worthless on both the NASDAQ and the S&P. Now, there would be minor options in between the major levels that we traded, but we did not exceed the big call wall and the big put walls. We did not exceed those. I'm assuming many or most of those options will have expired worthless on Friday. So we've got to restart and rebuild. And maybe those options books will have to be built up again. And I'm not sure how much volume we've got going so far. But that was a massive, biggest options expiry in history on Friday. And the market didn't manage to get through any of those walls. I think, maybe some of them, but not the big major call and put walls. Tanil, your question is, hey James and all, super keen to natural gas. Yeah, so we talked about natural gas. We can come back to natural gas if there are further questions on that. And oil. I know there was a lot of confusion about all of these energy plays over the weekend, and a lot of fear and doubt, and all sorts of people were emailing me and messaging me. But the trick and the key in these circumstances is to remain calm and not to try and predict what's going to happen next. Now, a bomb goes off in a nuclear bunker in Iran, or several of them. Iran threatens attack. The Straits of Hormuz might be closed. The Houthis are fractious. All this stuff going on, saber rattling from China and Russia. The members of Congress fighting with each other. Absolute chaos. and Donald Trump standing there saying, well, this is what, and then he's basically in peril of isolating parts of the MAGA party or the MAGA movement. And so a lot of stuff going on, all sorts of just not just bombs and war, but politics and markets and Jerome Powell. We just had the Fed and, so all sorts of uncertainty, and people are just getting very, very confused and into a situation where it's difficult for them to trade because they're making wrong decisions. So I don't know why I'm talking about this, but I think we were just talking about oil and energy and gold and that sort of thing. In these circumstances, when there's chaos and war, don't panic, don't do anything. If you need to do anything at all, the best thing is just to, if you do need to do something, just hedge your positions and just hedge them, and then revisit your positions one by one thereafter and decide what you want to do with that hedge position. Now that you've locked in all of the risk that you have decided at that moment, you've locked in the risk. It's not going to increase. It's not going to reduce. Your risk is now locked in at a certain percentage of your account or number of dollars, and you can then decide what to do with that. It's not going to get worse. It's not going to get better, but it's not going to get worse. So please, folks, and you're going to hear stuff on the news and stay away from Twitter and YouTube and all the rest of it, where you're going to see the clickbait and the screaming out to you, Iran attack, Straits of Hormuz. I mean, I did it myself. The title of this video, my last video this morning, was "The Straits Might Be Closed or Blockaded." And you'll see this stuff all over the show. It's designed to generate the maximum amount of fear in you and the maximum amount of confusion. And all that's going to happen is that you'll end up losing money, and the big market makers and whales and funds are going to take your money from you and gladly thank you for it. So, yeah, you've got to be super careful. And in times like this, don't make rash decisions if you value your trading account. If you don't value your trading account, it doesn't matter, does it? So that's options expiry and natural gas. Robson, your question is, last week I asked you what to do with natural gas hedge, long from 4.18 and short at 3.65. You got out of your longs at around 4.1. You're in a better situation right now, thanks to my advice. Well, Robson, well done. It's not easy to hedge, by the way. And what you did there, even though you knew it was the right thing to do, perhaps at that time, it's still not easy to hedge. Just as it's not easy to take a stop loss, or it's not easy to add or reduce size, or have to adjust your trade when you're in a difficult circumstance, or whatever it might be. But the fact that you hedged at the right time, you protected your account, and you're still here today and still typing, still watching me on YouTube is very pleasing to me, and I'm glad that you did that. And I must congratulate you, because even though hedging sounds like the easy way out, a lot of people say, well, hedging is for pussies, it's for sissies. It's for people who can't accurately predict where the price is going to turn around, or the exact level at which the market will find support or resistance. It always amazes me that people can actually say that they, I'm assuming they're implying by saying that they mean that they are able to accurately predict where the market will turn, to the pip, to the dollar, to the penny, and therefore they don't need to hedge. Well, no. Okay, if that's your claim, then that's your claim, but I don't believe you. And you don't know exactly where the market's going to turn. No one does. And therefore, hedging is an incredibly useful tool. But to actually use it like you've done there, Robson, is not as easy as it sounds. It's just as difficult as making a major decision about anything to do with your account or your money. And hedging is one of those decisions. Like closing a profitable trade is one of those decisions, or closing a losing trade, or just getting into a trade in the first place. These are all key and vital decisions, and none of them are easy. And hedging is not easy, so well done. My hat's off to you. I'm pleased that you've managed to save your account and hopefully make some money as well. Fariba Bahrami, your question is, any upcoming catalytic news for coffee? For example, future rollovers and such things. For coffee, Fariba, I don't know. I haven't actually had a chance to look at this today. I've been focusing on oil and natural gas and gold, but so we took profit on this on our coffee trade down here. I think we still got 15 or 20%. I'm not sure exact size left of it. It's not a lot, but we've taken profit. And really, I think, coffee, my idea has not changed. And I'm not too worried about futures, expiration, contango, backwardation, any of that sort of thing. I'm not trading the futures, by the way. I'm trading the continuous ETF here at Pepperstone. But this is what I think is going to happen. I don't trade the futures on some of the softs and grains because my broker doesn't offer those. But Pepperstone does offer them on the continuous contract, continuous ETF. So this is my sort of target. We're a little bit ahead of time on coffee. Were we talking about coffee or cocoa? Hope I haven't. Yeah, coffee. So coffee and cocoa, they go together. So that's my view. We're a little bit ahead of time on this move down, but we've managed to take some more profit down there. Maybe a bit of a bounce off this channel center line, and then a squiggly path down, eventually a breakdown through the channel and further downwards. So we're out of like 80% of our trade on that one already. And same on cocoa, we're out of quite a lot of, I think we've also only got 20-30% left on this. But this is the same sort of thing. There's our entry. We've taken shorts on various occasions to the left-hand side of this chart. We've been short often from the top. We've hedged on a number of occasions. We've taken profit on a number of occasions. But now we're short again. And we're looking for this to move down to the bottom of the pink zone, then the purple order block, then the top of the yellow zone, and then through there back down to more sensible levels at around about 5 to 3 to 4, 4.5, let's say 4,350, something like that. That's that next Fibonacci support level, and that's the 78.6%. So that's where we need to be, somewhere into this region, and that's cocoa and coffee. All right. As goes, currency all the way. You like trading currencies. Fair enough. I've been a Forex trader for over 25 years, so I know my way around the currency markets a little bit. But they're currently not my favorite markets to trade. And I think it's because the dollar index has been in a range for about 3 years now, and it's made everything just a bit messy and a bit choppy. Let me show you the dollar index weekly chart, and you can see what I mean. So now we've started to move down, but look how far we've got to go back to get out of the chop. That's all the way back to December 2022, and that's the last time we had some proper directional move, December 2022. Since then, until we got to this high at the top of the megaphone, there's my target, by the way, on DXY, down at 93, and I think we need to get down to there. That's the bottom of the megaphone, it's the lower 200 period Bollinger Band, and it's this order block. I think it's almost certain that we'll get down to 93, and therefore, and we're trading at 99 now, that's 600 pips down below us, which means a 600 pip euro rally, a 600 pip pound rally, Canadian dollar, Australian dollar, Japanese yen, New Zealand dollar, all of them. And that's if the dollar index manages to get down to where it should be, the bottom of the order block, the bottom of the megaphone, and the lower 200 period Bollinger Band. Why are we talking about currencies now? Oh yes, I know why. The comment in the chat. From Asguz. Drake Flory, I hope you have a good day, James. Thank you, you too, Drake. And H says, yes, he agrees. I'm not too sure with what. You write the exam? No, I haven't written the exam, Ethan. I want to. I do fear, though, that many of the things I have to write about in the exam, looking at the notes and the text material, that a lot of it I actually don't agree with, but that's another story. I think you just got to do these things and write them down the way they want you to, and like any other exam, like being at school or university, you just write what they want you to write, and then you can build your own ideas upon that. Opinions on Swiss yen? I don't have any opinions on that, Asguz. I haven't looked at that chart today. Hello from India. Hello, Sona. Good day, Sona from India. QS Krishna. And then the Jazz from Germany. So I finally decided to join your private group. Excited to be part of it. See you on the other side. Fantastic. Thank you, the Jazz. Lovely to see you joining the private group. And I'll see you inside in a couple of minutes' time. We'll be finishing off here soon. And let's try and make some money today. And for those of you who are not in my private group, there's a link below. Click on that link. And there is a discount on at the moment. 30% off. And if you click on that link, you can join my private group. And that discount will be removed in the next few days. So we're starting a new thing, which I'll tell you about in a couple of days. Tanil, all good, thanks for the update. And MD, can you share your thoughts on XRP and ETH? I've already covered this. I've already covered XRP and ETH, MD. So I'd encourage you to look back through the video. But basically, I'm long. I mean, I've just added so quickly. I'll just quickly recall this. Added a new long tranche there. Very simple. 100 period moving average, order block, Fibonacci level. Boom. Long, extra long on ETH right there. Very small. Bitcoin, added an extra long as well. Very small. Down there, I've got loads of Bitcoin. Look where my main entry points are. Starting at 74,000. I've got one at 80,000. I've got one at 83,000, 84.5, 84.5. I've got one at 102, 106, 100, and then 98, 99, 99, 600, something like that. So yeah, I've covered all of these, Bitcoin in its bull flag, and then we've also added extra tranches onto Ethereum and XRP, and I put an extra XRP on here, right down here. This is a pretty simple picture on XRP, and I just drew a fib from the bottom to the top. We got down to the 618 Fibonacci level, bounced off, clean, and off we go, holding that level so far on XRP. So 3 longs on cryptos. I know people don't like calling Bitcoin crypto, and that crypto is basically bollocks, rubbish. It's all the rest of the stuff, and Bitcoin's the only thing worth holding. I don't know if that's true. Could be. I'm a Bitcoin maximalist, by the way. I've got some ETH and I've got some XRP, but most of my stuff's in Bitcoin. And I feel the same way about every other thing I trade. If I'm trading gold, I don't go for the junior miners or the miners or gold derivatives or gold ETFs. I trade gold. Same with crypto. It's not really about ETH, Bitcoin, all the other altcoins. It's about XRP and all that sort of, it's about Bitcoin. If I'm trading currencies, I don't trade the New Zealand dollar against the euro or the Swiss franc against the Australian dollar. These miners and minor crosses and exotics, I don't trade those generally. I trade the euro, the biggest one. I trade the pound. I trade the yen, the 3 biggest. I'm a maximalist in that sense too. And when it comes to other things like oil and natural gas, I trade the futures as much as I can, apart from when it's not possible because of rollovers. So I like to go straight to the kind of base source, or the base thing, the actual thing that we're trading, and trade that as much as possible, rather than the derivatives and the ETFs and all that sort of thing. That kind of, there's extra cost involved. It's not direct. It's not the actual pure price that you're getting on the commodity or the instrument. It's something different. And I'd rather trade the original thing, not something different. So that's my point. Yeah, so H was saying, yes, he agrees with the subscription. A few dollars saves a lot of headache. And thanks for that comment. So my private group is really there. I really put my life and soul into the private group. And for me, my main job there is to help people to make money and to help them not lose money, both of them equally important, and to be able to manage the psychology around it. Now, I don't manage to do it all that. I'm not in there all day, every day. I'm in there maybe 12 hours a day, and I try to answer as many questions as I possibly can. And if I need to, I'll make a video even on the topic or the subject. And if you've got a direct personal question that you'd like to ask me about your trade positions, the market, your personal situation with how you want to manage your money around the markets, whatever, you can do that as well. And I will literally personally commune with you and interact with you and help you through whatever you're going through. So those are all the benefits of the private group, and it literally is under $100 a month. In fact, right now, if you join, it's $60, and I think 60, maybe it's $70, 30% off, I think. And that will just, so many people will try and save $70, but go ahead to lose $7,000 or $70,000 because they didn't want to spend the $60 learning how to do it properly. So there you go. Thanks for that, H. I'm not sure if you remember, but I don't know who you are, but I'm assuming you are. Okay, folks. Well, I think that's it. Time is almost up. Unless there are any other further questions, what I'd actually like to do is try and give away some free memberships. But every time I try that, oh, here we go. No, can't do it. Yeah, I think at the end of the month. Okay, folks, so I'm going to quickly scan through the charts one more time and have a look through them with you and see if anything's changed since we started this live stream and make any comments, and then I'll finish off unless there are any further questions, which I will answer. But if there aren't, then I'll just finish off. So quickly going through currencies, we're long on the euro, long on the pound, and long on the Aussie dollar, and short on the euro yen and the pound yen. It hasn't really moved much yet, although actually since we started this live stream, the pound yen and the euro yen have come off pretty sharply. Let's have a look at the euro yen. Actually, let's look at the pound yen. And I don't know how many people are in this trade, but I really like this. We didn't get to the top 200 period Bollinger Band. Let's just make sure it is 200 periods. Yeah, the 200 period Bollinger Band. We didn't quite get there, but close. But notice how we spiked up through that resistance level and we've fallen back down below it with almost the candle spike is almost the same length as the candle body now. So it's a significant spike and through that resistance level. And that level there is the 61.8% Fibonacci level, the retracement of this entire move. Now, we've broken up through that red falling trend line, which is also the channel top, which is a concern. But it actually just shows that we're moving sideways across the page rather than upwards. And I expect that this will dribble down. Yeah, so that's moved a little bit. Same as the euro yen, also moved down a little bit. There's the euro yen in the middle, bottom of your screen. And then the Aussie yen, remember we're looking to buy this, folks. If you are looking, this is probably the best currency trade today, I think. The best opportunity, long the Australian dollar against the US dollar. Target's about 0.7, we're trading at 0.64, 6380, 6390. So a decent upside target. And bear in mind that my downside target for the dollar index, for the dollar itself, is 600 pips away, which should push up the majors by and the other crosses by 600 pips. So 600 pips on the Aussie would take us to 0.7, which is when the dollar index will reach 93. So that all looks excellent to me. I'll be looking to add a new long position onto the Aussie dollar a little bit later on once this live stream's passed. And then quickly, let's go across to stocks. Has anything changed since we started? Not much. A little bit of a pullback on the NASDAQ and the S&P. And then the names, Coinbase pulling back a wee bit. What a big rally. Tesla, a little bit up in pre-market. ARK-K, fraction down, actually basically at the same price as the close. And NVIDIA just a tiny bit down. And then the German 30 still holding support there. Quickly across to Bitcoin, crypto, XRP, Ethereum, all holding up, looking okay. And remember, we're short on gold, long on silver, long on copper, all looking okay, but nothing really moving much. But certainly not upwards. We haven't seen these big spikes in energy and gold like everyone is expecting. In fact, as we're talking right now, WTI has dropped even further, and natural gas, yeah, just hovering around those slightly lower levels. One more chart that we haven't looked at, and I'll just finish with this, is the, one more page, really, the dollar South African rand. We're long on this one, and I've got a fractal drawn in here. I'm looking for this sort of thing to occur, a repetition or repeat. This move down on this chart means that the rand has strengthened significantly, about 10% against the US dollar, for no apparent reason, in my opinion. And therefore, I think this is probably a structured move. Remember, this is a very thinly traded currency, very small market compared to, let's say, the euro or the pound. And so it's very easily manipulated. And this looks like a constant manipulation pressure downwards, and that will force a short squeeze like we saw on the left-hand side, if that is the case. And then US 10-year dipping down a little bit today. There was a big concern that treasuries would collapse, that bond yields would just go through the roof as a result of this war in Iran. And yet the opposite has happened in this case as well. Treasuries have moved up and the bond yields have moved down. Just a fraction, but at least it's in the right direction and not the other way around. And that's all, folks. I hope you've enjoyed that. It's been a solid hour with you today, and I hope you've gleaned some useful information from here and that this will help you in your trading. If it doesn't help you in your trading and it's not sufficient, like I said, you can at least just join this channel for $1 a month. Otherwise, please feel free to email me if you've got something specific. My email address is james@arcisfx.com, and you can email me if you've got any problems or issues or anything else like that. And if there's enough people that are looking at the same issue, same problem, I'll very gladly make a video for you if you want more clarification. And then Michael wants ukulele. Michael, ukulele lessons, how much? Well, Michael, I think I could teach some ukulele for a price. I'd have to negotiate that with you. MD says, hi James, can you share your thoughts on XRP? Oh, we've read that one already. Yes, you agree with subscription. Love your analysis. Thanks, Sean Maddox. And GSA chemistry for various things and boards. I am James, private group member, and I recommend all must join. Thank you very much. GSA Chemistry for All ITG, NEAT, and Boards is a member of ours. Thank you very much. I don't know what your name is inside, but that's okay. You can keep anonymous. But he's saying he's a member of the private group, and he highly recommends it to everyone. And then Erica, nice to see you too. Folks, have a great trading day. Good luck. And please, 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 if you're in a state, in a situation, in a panic, at loss for what to do next, in a big drawdown, you don't know how to handle it or deal with it, please contact me. Please come and join the private group. Spend the $60. I'll even give it back to you if you don't find that it's worth it or that it's been helpful to you. I'll give you the money back. But if you are in that sort of situation, it's only for those who are desperate, but if you are in a very difficult situation, come and join the group and I'll help you out and help you and guide you through it. And if at the end of that you want to get your $60 back, fair enough. I don't think that's fair, but I understand. Roby, thank you, mate. Roby says, thank you for these wonderful and educational videos. I will be joining soon. Thanks, Roby. I appreciate that, mate. And can't wait to see you inside there. All right, have a wonderful day, everyone. And I think it's going to be a good week. And I think, basically, there's a great deal of optimism that's under the surface that people don't know about and that are not aware of, and that we could see some pretty significant moves in the stock markets, maybe Bitcoin, maybe a big move down in gold, which will give us a chance to buy some more, closer to $3,000 or below. And then natural gas and WTI, I think they're going down. And I think we're going to see natural gas closer to $3, maybe even lower if that head and shoulders works out, which I don't think it will. Or just stop at $3 and bounce. And I think oil is wending its way down, bit by bit, gradually and hesitatingly, down back to $55, and then below that, down to 50, and eventually below $50, perhaps, who knows? That's an extreme case, but if we do get below 50, that'll be pretty good news for the consumer and industry and life in general. Cheap energy, that's what we want. All right, folks, speak to you soon.